Here are some of the top stories we're watching this week. All eyes will be on the UK's House of Commons as MPs vote on the Brexit deal. The European Central Bank will meet to discuss plans for 2019. And we'll find out how Inditex, the world's largest clothing retailer, is faring. Let's start in the UK, where members of Parliament are set to vote on the Brexit deal 2.5 years after the EU referendum took place. On Tuesday, MPs will vote on whether to accept or reject Prime Minister Theresa May's withdrawal agreement with the EU. But in the face of huge opposition, the government is likely to be defeated. Many so-called Brexiters within Mrs May's own party, as well as the Democratic Unionist Party that is propping up her minority government, have vowed to vote against the deal. Their main concerns centre around the backstop in the agreement, which is designed to avoid a hard border between Ireland and Northern Ireland, and skeptics believe it will force Britain into close ties with the EU for the foreseeable future. So, what can we expect after the vote next week? Well, here's our political correspondent Laura Hughes with more.
Already, MPs and political commentators are speculating over what might happen when the deal is defeated next Tuesday, as we all suspect it will be. Well, there are a number of pathways that the Prime Minister could take. She could seek to amend her deal and come back to MPs within 21 days and give them a second chance to vote for or against her deal. Equally, there will be some MPs calling for her to take a path that might lead towards a no-deal Brexit. When the vote is defeated, if it is on Tuesday, MPs will focus on two different scenarios. One, they will look at whether or not they can amend the deal so that it looks a bit more like a Norway-style arrangement with the EU. And then there will be others, perhaps even Labour, who will look at the possibility of a second referendum which would give the people a vote on the Prime Minister's deal. But as it stands, it's very hard to predict what will happen.
Now, it's a big week for the euro. The European Central Bank is set to explain how they plan to support the region's economy without one of the most crucial elements of their crisis-era stimulus, quantitative easing. On Thursday, ECB President Mario Draghi is likely to say that credit will remain much cheaper than in other parts of the world, such as the US, even though investors in the region's bond markets will have less support from policymakers. The likely end to the expansion of the €2.6 trillion bond buying QE program comes as growth is faltering across the 19 member states that use the euro currency. Growth was at its lowest level in 4 years in the fourth quarter, and many economists think that the region's third largest economy, Italy, is now headed for a recession. Here's our Frankfurt Bureau Chief Claire Jones with more.
So this week we'll see a really important meeting here in Frankfurt. The European Central Bank's policymakers are set to gather here on Thursday morning when they'll begin serious discussions about what the strategy for 2019 will be. They'll almost certainly also confirm that they plan to end quantitative easing at the end of this year. When it comes to 2019, the ECB needs to say that it is stepping back, that it will begin to ditch some of its monetary stimulus, but it also needs to convince investors that it won't head for the exit too quickly.
And finally, Spanish fashion conglomerate Inditex is due to unveil its third quarter results on Wednesday. The world's largest clothing retailer, best known for its Zara brand, has had a tough time on the market in the past 18 months, with worries about its margins and weak emerging market currencies pushing its shares down over 20%. But the company's sales were still up 3% during the first half of this year, and investors will be keen to see if Inditex continues to be one of the few winners of clothing retail's rapid shift online. Despite having 49 online markets, it has so far limited cannibalizing sales at its over 7,000 stores around the world. Our retail correspondent Jonathan Ely explains.
Inditex, the owner of Zara, has been one of the stars of the fashion industry recently. Investors love its short supply chain business model. Its CEO has been praised to the skies in the Harvard Business Review. 2/3 of analysts rate its shares a buy. But nothing stays still in this sector for long, and even this company is not immune from the challenges. It used to be the case that if you expanded and you wanted to grow sales, you simply opened more shops. That's no longer the case. You can also expand online these days, which can grow sales very quickly but requires heavy investment in IT, in logistics, requires whole new skill sets in marketing and presentation, and there are concerns that that dilutes margins. Inditex has been phenomenally successful in recent years, but nothing stands still and it will have to work very hard to maintain that record.
And that's the week ahead from the Financial Times in London.